What's going on?
Well, there is so much going on.
Yeah.
I do think the issue around trade is one that I think we're going to be living with for some time. I think there's now early signs that he's doing deals. You know, we know overnight that he's done a deal with South Korea to change things, and I think that's what he's going to do as the President of the United States. He's going to pick apart various things, but clearly the ultimate focus is China. I think the challenge we all have, if I'm honest, as global citizens, is the US, as we know, is over-consuming, and certainly over-consuming of global product to the tune of many, many hundreds of billions of dollars, and China happens to be one of the suppliers of that. So they can't, unless you consume less, he can't change the trade deficit that easily.
What does consuming less mean for United States growth, for the economic outlook then? Because as you quite rightly say, if you want to tackle your deficit, that means you're kind of buying less, spending less.
You do. Actually, it might be quite good because you might save a bit more. And given that US savings are down at record lows of 2.1% or something, I think there's an element that with interest rates starting to rise, the incentive to save and deleverage should be rising rather than just borrowing more money to buy new cars and everything else that the US consumer has been doing.
As an investor, at what point does trade become a fundamental that you have to take into account going forward, as opposed to just a bit of noise off to the side that doesn't take away from the fundamentals at all?
Well, I think the way I think you can think about what's happening with trade in two ways. I think the market on Friday did one thing and the market yesterday did another. Some people see trade as trade friction, as inflationary, therefore rates rise, yields rise, and then you have effectively a heart attack to the underlying economy and the prospects for corporate profits. I think on Monday we saw the opposite, which is that trade starts to trade's not going to matter that much. It may slow growth, which therefore means the Fed may not raise rates, and therefore that's good for risky assets because the longer term discounting rate is not going to rise as much as people fear.